Alright, quick update on Bitcoin and the markets. Bitcoin jumped up to around 83,500, climbing 5% in under an hour and triggered $92 million in short liquidations. This happened after the news in which Trump officially announced a 90-day pause on tariffs on all countries, except for China. They retaliated and got their tariffs at 125%. Within 10 minutes, US stocks added $4 trillion in value. Nasdaq, on the other hand, had its best day since 2001. I've got an interesting statistic prepared for you. That is, when we usually have a move bigger than 6% in one day in the traditional markets, it marks the bottom. This time could be no different. Let's look at the charts on Bitcoin. The Bitcoin price rejected from the weekly 50 moving average, as this has been proven as a major support in a bull trend. If we lose this support, things can get pretty ugly. The crypto fear and greed index signaled extreme fear each time we hit this zone, which is a big buy signal. Another thing that we should have in mind is that Bitcoin is highly correlated with the global money supply. The global money supply hit a new all-time high. You might wonder, why Bitcoin is not at an all-time high? Well, the good thing for you is that the global supply is a lagging indicator. Bitcoin follows the global supply at a lag about 100 days, give or take. We can see on this chart that we still have some sideways action for a maximum of a month. If we continue to follow the correlation, we might see new all-time high for Bitcoin at around the end of June. But not all Bitcoin traders are fully bullish yet. All of them are still cautious. Why? The Fed just dropped some meeting notes, and they're a bit worried about stagflation, which basically means slow growth mixed with high inflation. That kind of uncertainty makes traders nervous. Also, the 10-year US Treasury yield is all over the place, which signals that people are kind of losing faith in how the government's handling debt. If yields keep rising, it gets more expensive for the US to borrow, and that's bad for the dollar. This aligns perfectly with the period of sideways action that the previous chart showed us with the global money supply. Now let's talk about XRP. While the price has been under pressure, the network fundamentals are off the charts. According to Glassnode, XRP just hit 6.26 million addresses holding one or more XRP, which is at an all-time high. That's a clear sign retail is piling in. What is even more impressive, XRP is crushing Bitcoin in retail growth. Active addresses are up nearly 490% since the 2022 lows, compared to Bitcoin's 10%. This surge is happening as XRP slowly recovers from a quiet Q1, where participation dipped but holding increased. It's not just speculation. This could be strategic accumulation ahead of some big catalysts, especially with Ripple case wrapping up and ETF discussions heating up. Right now XRP is trading at $2, up 20% in the past 24 hours after the tariff pause news. It bounced from the 50 weekly moving average, but it is still below the 50-day SMA. Now, one of the big macro news. Paul Atkins has been confirmed as SEC chair, replacing Gary Gensler. This is a huge shift in regulatory direction. The Senate confirmed him in a 51-45 vote, mostly along party lines, with every Democrat opposing. Atkins is no stranger to the commission. He served under George Bush and has since built a name as a pro-market, pro-innovation reformer. He says giving crypto a firm regulatory foundation is his top priority. Let's not forget, under Gensler, the SEC was a battlefield. Coinbase, Binance, Ripple, nobody was safe. But under acting chair Mark Uyeda, the tide already started turning. Lawsuits got dropped, meme coins, stablecoins, and mining were essentially exempted from securities regulations. Now with Atkins confirmed, the regulatory pivot becomes official. What to expect under Atkins? Here's what the crypto community is watching for. Faster ETF clarity. XRP, Solana, and even Dogecoin ETFs could accelerate. Less ambiguity, which could attract institutional capital back into the space. Potential for staking support on Ethereum ETFs. And possibly the end of SEC by enforcement. Atkins consulting firm Patoma Global has worked with major players in crypto and DeFi, and that experience could make him better equipped to write workable rules. Of course, not everybody is thrilled. Senator Elizabeth Warren slammed Atkins over his ties to collapsed exchange FTX, calling them breathtaking conflicts of interest. She even accused him of helping Sam Bankman-Fried get richer post-government. There's also concern about deregulation in general. Some worry it could destabilize markets, especially when paired with Trump's aggressive economic policies, like the new 10% tariffs and the rumored Doge initiatives. So yeah, it's political, but the path is being cleared for major crypto reform either way.